I know what you're thinking. Why the hell is a stock market drop good for me? Well, you come to the right place. My name is Debt-Free Joel, and on today's personal finance tip, I'm going to let you know why a stock drop today is good for your financial future. If you like these type of videos, cool. Click the like and subscribe button, and as you know, let's get to it. So why is a stock drop good for you? Well, first of all, I'm talking to an adult, I'm assuming, and you should know by the time that you've been looking at my channel that I'm a long-term investor. You see, what happens is that when the stock market drops the way it's been dropping now and that we're possibly going to be heading into a recession, at the end of the day, most people are going to jump out the market. See, a lot of people who are going to jump out the market are the folks that should not be in the market in the first place. See, these are folks who are gambling. Right? These are folks who are trying to speculate. These are the folks that are adding so much volatility to the market that when the market starts to drop, they run for their lives. You don't want these people in the market because it distorts the performance of stocks that you're looking at. So that's one of the first reasons why I like the stock market drop. It kind of weeds out the people who are there to just gamble. We don't gamble, we invest. So that's one of the first reasons why I like the fact that when you have a stock market volatility, when the stock market starts to drop, it kind of sets the expectations of what the stock market is supposed to do, and it gets the gamblers out the game. The second reason why I like it when the stock market drops, it gives us as long-term investors buying opportunities. Let me give you an example. Let's say I owned Apple, and I thought to myself, Apple 20 years from now is going to be better than where it is right now. The stock valuation, the price per earnings or per earnings share, or whatever you want to look at it, net income, balance sheet, cash flow, whatever you want to look at it, you're basically saying that 20 years from now it's going to be better. Right? We're in 2022 as of the recording of this video. That means in 2042 is when I'd likely look at it again to sell. Do you really think I care what happens for a few months in 2022 if I'm going to sell it in 2042? No. If I think the fundamentals of the company are good, if I think the leadership of the company is good, if I think the economics of the company is good, if I think their products are going to be good, then why do I care if it starts to drop now? That gives me an opportunity to go buy it some more because I'm buying it at a cheaper price. Stock market drops actually allow you to look at things from your perspective and say, this is still a good company, it's still good leadership, it's still good products, their cash flow is still good, their free cash flow makes sense to me, I'm going to buy more of it. That's what a stock market, drop does for you. If you're a short-term investor, this video is not for you. If you're a long-term investor, keep listening because this is what we do. What we do is we look for market opportunities for us to buy things at discounted prices so that we can reap the benefits later on. So that's the second reason why I like it. When the market drops, it gives me the reason to buy things that I already own if it still makes sense to own it, right? Like I said, no change in the stock investment. And the other reason why I like it, at least the third, is that at the end of the day, when the market drops, it resets expectations. So let's say, for example, that you wanted to buy Tesla at its height, right? You knew that by the time they did the stock split and it was still running crazy and everybody and their mother thought Tesla was going to be flying cars in like 2 days, you knew the stock price was way too high. And then what happened? It started to drop, right? He wanted to go, and Elon Musk wanted to go buy Twitter, and the stock market started to drop, and the stock itself started to drop, and volatility started to kick in, and then Ukraine, and then inflation, and then Joe Biden, and blah, 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 blah. And now, if you look at Tesla, it's trading at a pretty deep discount. Now, you can look at that, let's say you never owned it and said, okay, maybe it makes sense to go look at it again. Does the fundamentals of the company still make sense? Does the leadership still make sense? Does the product still make sense? Does the economic environment for the stock still make sense? If I buy it now and I hold it on for 20 years, then am I going to make more money from it now than I am going to be later? Like, you look at it from those type of perspectives. So it sets expectations for stocks that you thought were overvalued. So if you felt that Tesla's going to be good 20 years from now, you buy it. Why? Because the stock market started to pull back. Maybe you don't put all the money into it at first. Maybe you put, let's say if you want to put $5,000 into that stock. Maybe you put 1,000 into it now, 1,000 a week from now, another 1,000 a couple of weeks from now. You dollar cost average over time, and then you put a decent base and you hold on to it. And the only time you sell the stock is when it goes against the fundamentals of things that you looked at. So for example, did the leadership change? Did the cash flow of the company change? Did its net income change? Did its earnings per share become, way too expensive? Did the PE ratio become way too expensive? Were there macroeconomic factors that makes that stock look like, it doesn't look good? You see, we're long-term investors. On this channel, we're long-term investors. That's how we think. So that's what you can do. This is the reason why I like market downturns. It weeds out people that shouldn't be there in the first place. It allows you to buy stocks that you already have that you think are still good. And it opens up opportunities for you to look at other investments that you thought were overpriced. That's why I like it. I'm Debt-Free Joel. If you like these type of videos, cool, man. Click the like and subscribe button. Leave a comment below if you think, agree or disagree. I don't care. Feel free to follow me on Instagram at Debt-Free-Joel. We put a ton of information out there on finance as it pertains to saving, investing, and most importantly, being charitable. Until next time, keep your money up.